The industrial demand based on that is rising dramatically, double-digit percents every year, whereas silver production is flat at best and really declining slightly annually, year over year. And from what I understand also, China has really come into the Central American silver production and monopolized it. And I even understand that they've been paying prices for raw silver ore that's equivalent to purified silver. You know, they're really strongly demanding it. And it's not for monetary issues. It literally is. They're 80 to 90% of the production of solar panels, voltaic cells. So I think it is really a thing that will spring on the public. You and I know about it because we're in touch with the industry. But I don't think the average Joe on the street is aware of that. And it's one of those kind of things that could help separate silver from gold, because gold is monetary solely, and silver has this industrial aspect. And to the extent that uncertainty hits the world, and we think that's coming, stock market drop will facilitate that in some ways. Also, jeopardy of bond markets will facilitate that in some ways, in a sense of nervousness. You know, I need to protect myself. Even here in the U.S., where families, well, like in Texas, they're tired of the repeated hurricanes knocking power out for 2-3 weeks. You know, so demand for solar cells, even in the U.S., is strong. I think the political instability we're about to see is something we predicted about a year ago. We can get on that later. Provokes emotion. And when stock market starts to break, that will really provoke emotion. Not just economic pain as rising commodity prices have done, but if suddenly you take 20% off everybody's retirement account or 30% off, they're getting hurt badly. They're bleeding from both ends. And that generates emotion. When you generate emotion, you generate factors that we don't normally incorporate into market analysis. You generate dynamics, downside for the stock market, and a movement toward things that make you feel comfortable. In the case of monetary, where you want to put your cash, what kind of cash do you want to keep it in? Bullion or paper that's evaporating in value? In terms of your sense of confidence that you have electric power tomorrow, you know, on a sense of instability. What the heck? $3,000, you can buy a generator that's solar powered that can generate most of your appliances. So even in the U.S., that demand could be sparked. But I think it's real. I think it's a real factor. And yes, it's been hyped within the industry and analysts like you and I. But the average public that's not a factor in their mind. And if all of a sudden you hit them with that gives them an extra excuse to favor silver over gold. And I'm going to suspect this. We think the advance in silver, which again wobbled today, continues. You take out the recent high, for example, at 35. Yet again, we do that. We make a high and, oh, goodbye, you know, and it's not goodbye. You take it out. We're at that threshold where if you get that silver gold spread up to that 1.3%, which to us is a neon sign saying, I'm going to accelerate. I think silver's going to take out its dual highs at 50 and do it in a flash. And once you do that, suddenly the public then wakes up, who've not been paying attention to silver. Their buddy has, their next door neighbor has, and he's been telling them stories and they didn't do it. And all of a sudden they have a sense of uncertainty. That's when silver gushes. And all of a sudden, I bet at that point in time, that's when those type of headlines about the industrial demand for silver hit the fore.
Silver, often referred to as the poor man's gold, is emerging as a powerhouse commodity with both monetary and industrial significance. Michael Oliver's analysis sheds light on the critical factors driving silver's ascent and why it holds a unique position in the world of precious metals. Unlike gold, which is primarily a monetary metal, silver occupies a dual role in both monetary and industrial sectors. This duality creates a fascinating dynamic. On one hand, silver serves as a store of value and a hedge against economic uncertainty, much like gold. On the other hand, it is indispensable in industrial applications, particularly in the rapidly growing renewable energy sector. As Oliver points out, demand for silver in photovoltaic solar cells is skyrocketing, with solar panels accounting for 80 to 90% of global photovoltaic production. Silver is becoming a cornerstone of the green energy revolution. This is particularly true as countries and corporations ramp up efforts to combat climate change and transition to renewable energy sources. China's role in this dynamic cannot be overstated. As a dominant player in both the production and consumption of solar panels, China has aggressively secured access to Central American silver production. Reports of China paying premiums for raw silver ore equivalent to refined silver prices underscore the urgency of its demand. This is not just about market economics, it's a strategic move to monopolize a critical resource. The average consumer is largely unaware of silver's industrial importance. While industry insiders and analysts recognize the trend, it has yet to capture the public's imagination. But this could change rapidly. Once silver breaches critical price levels, such as its historical high of $50 per ounce, it could trigger widespread attention and a surge in investment. Silver's rising industrial demand is not limited to solar panels. It plays a vital role in electronics, medical devices, and even electric vehicles. With global production flat or declining slightly, this growing demand sets the stage for a classic supply-demand imbalance. For investors, this is a golden, or rather, silver opportunity. Market dynamics are not governed solely by rational factors. Emotional triggers, such as fear and uncertainty, can have a profound impact. Oliver highlights that a significant stock market correction could be a tipping point for silver. When retirement accounts lose 20 to 30% of their value, investors are likely to seek safe havens. For many, silver offers a compelling combination of affordability, safety, and potential for appreciation. This emotional shift can be seen in the growing interest in bullion savings. As Oliver notes, people are already moving from cash savings to physical silver. This trend is likely to accelerate as economic instability intensifies. While gold and silver often move in tandem, their unique characteristics create opportunities for diversification. Gold's primary appeal lies in its role as a monetary metal and a hedge against inflation. Silver, on the other hand, combines monetary value with industrial utility. This makes it more volatile but also more dynamic. During times of economic distress, silver often outperforms gold. This was evident during the 1970s and again in the early 2000s. As Oliver points out, silver's potential to gush is tied to its ability to attract both industrial and investment demand. Once momentum builds, it can lead to rapid price acceleration. The issue of market manipulation has long been a point of contention in the silver market. Oliver's observations about dark hours trading, where significant price moves occur during low-volume periods, suggest that manipulation may still be at play. However, history shows that such efforts are ultimately unsustainable. When the fundamentals align as they are now, market forces overpower artificial suppression. Technical analysis indicates that silver is on the verge of a major breakout. Oliver's reference to the silver-to-gold ratio approaching critical levels is a bullish signal. If silver can decisively break through its historical highs, it could usher in a new era of price discovery. This would not only attract speculative interest, but also validate silver's growing importance in both monetary and industrial contexts. For investors, the key takeaway is clear. Silver is not just a secondary metal. It is a dynamic asset with unique attributes that make it indispensable in the modern economy. Silver is at a crossroads. Its dual role as a monetary and industrial metal positions it uniquely in today's economic landscape. As demand continues to rise and production remains constrained, the stage is set for a significant revaluation. For investors seeking both safety and growth, silver offers an unparalleled opportunity.
I can't deny that it's occurring, and we know in the past it's occurred. You go back to the 79 bull market in gold, the IMF was dumping gold by the tons, okay? Sale after sale after sale, dumping gold. And it initially in 79, as I recall it, I was in the futures markets then, there were sharp drops when the IMF would dump. But there was a point at which they would dump and it wouldn't drop at all and would go up. Okay, so there's a point at which reality can't be distorted even by the superstate. Okay, they think they can, and yes, they do temporarily. And my son Brett has noticed that when you look at the hourly action of the S&P, of the silver and the gold markets. Look at this morning, for example. When do they beat it up? It's always in the dark. As you're about to go to daylight, early in the morning when they open the futures market, they've already dumped on the market during the night when trading is less volume. And you get these huge down hourly bars. But it always occurs like in the dark, when they can manipulate easily. Ultimately, that's going to backfire. And also stand back and look at it. I've got some charts showing year-to-date performance of the markets. And you see the S&P and the NASDAQ up, 10, 15%, pushing on 20. They're backing off right now. They were near their highs. It wouldn't shock me at the end of the year. They're down on the year. But silver's up 35%, gold's up about 33% on the year-to-date. Okay, so despite the manipulation, which you can probably see in daily action, maybe today, for example. Look at the gains they've made. So really, it's not working. If it were, gold wouldn't be up 30+% this year. silver up 35. So ultimately, there's a point at which that manipulation doesn't work at all, and market just blows through them. And ultimately, the manipulation likely compresses the volatility that later is unleashed, where if reality is distorted and you've kept reality from emerging, when it finally does emerge, it's more volcanic than it would have been if you'd let it alone. Okay. So actually, it's probably bullish for gold and silver investors that the central banks think they can play that game.
Small portion of my paycheck and buy a few silver coins now and then to protect my purchasing power and to kind of store wealth outside the traditional financial system.
I think that stock market break, despite what the popular wisdom is among most investors. You break the stock market, gold and silver go down. That is simply not true historically. 2000 to 2002 bear market, the stock market, gold went up nicely, so did silver. 2007 to 2009, with the exception of 1 month in October of 2009, gold and silver went up sharply. When the stock market collapsed in October 2008, everybody said, oh my God, I sold gold too. Well, gold was ripe for a technical correction, even by our metrics then. It corrected quickly, and within about 4 or 5 months, it was back to its high. S&P kept going down through March of the next year, and it took it a year or two to get back to its high. So everybody's fixated on those momentary times where they could find 4 weeks here or there where gold went down with the stock market. They don't see the bigger picture. And frankly, this time it's different. If you generate that fear and you hurt people, literally hurt them, with the retirement accounts dropping 20%, 30%, and you give them a sense of fear on both ends, the cost of living and their savings are gone. I'm already getting emails from quite a few people saying, I'm moving from cash savings over to bullion saving. And, I think that's already going on. And when you crack that stock market and create the negative sentiment and the emotion goes with it, people will seek something that's going up. Even if they don't quite understand why. Their buddy did it and it's working. They're going to move money into bullion savings where they feel comfy, that they know that their savings aren't going to deplete in buying power. But I think the stock market actually is a positive factor for that, not a negative. We shall see. But I think that factor is about to come into play, and probably rapidly.
Michael Oliver's insights into the silver market paint a compelling picture of its imminent boom, driven by both structural and emotional factors. While silver's dual role as a monetary and industrial metal is well known to industry insiders, the average investor and the broader public have yet to grasp its full potential. This ignorance creates a unique opportunity for those who act now. The psychological aspect of investing plays a significant role in how markets move, especially in the case of commodities like silver. Social proof, as Oliver notes, can act as a powerful motivator. Imagine this. Your neighbor casually mentions how they've doubled their money in silver. Suddenly, you're intrigued. This social dynamic has historically driven speculative booms, and silver's low price relative to gold makes it an accessible entry point for the masses. The underlying industrial demand for silver is a critical driver of its potential boom. Solar panels, which heavily rely on silver for their photovoltaic cells, are at the forefront of global renewable energy efforts. As countries push toward net zero emissions and corporations pledge to go green, the demand for silver and solar energy production is expected to soar. China, as Oliver highlights, has already moved aggressively to secure its supply by monopolizing Central American production and even paying premiums for raw silver ore. This is a clear indication of how critical silver has become on the global stage. But solar panels are just one piece of the puzzle. Silver's use in electric vehicles, EVs, medical equipment, and 5G technology is growing rapidly. These industries are not just fads. They represent long-term shifts in the global economy. For instance, the adoption of 5G networks will require significant infrastructure upgrades, many of which depend on silver's unparalleled conductivity. In the United States, demand for solar power generators is rising, especially in regions prone to extreme weather events. Hurricanes in Texas, for example, have led to a surge in interest for self-sustaining power solutions. These generators rely on silver and represent yet another layer of industrial demand that bolsters the metal's future. Economic pain, whether from inflation or a stock market downturn, amplifies the emotional triggers that drive investors to safe havens like silver. As Oliver points out, a major correction in the stock market could be a game changer. When people see their retirement accounts dwindle by 20 to 30%, they don't just lose money, they lose trust in traditional financial systems. This distrust creates fertile ground for alternative investments like silver. History serves as a guide here. During the 1970s, the International Monetary Fund, IMF, tried to suppress gold prices by dumping massive amounts into the market. Initially, this caused sharp declines, but as the market absorbed these sales, prices eventually skyrocketed. This same dynamic could apply to silver today. Market manipulation, whether through short selling or low-volume trading during off hours, may temporarily suppress prices. However, it also compresses volatility, setting the stage for explosive moves once the manipulation ends. Consider this. If silver's price breaks through its historical high of $50 per ounce, it could trigger a wave of retail and institutional interest. The psychological impact of such a milestone cannot be overstated. Suddenly, silver would dominate headlines, sparking FOMO, fear of missing out among investors. This could lead to a feedback loop where rising prices attract more buyers, further pushing prices upward. While manipulation is often cited as a barrier, Oliver argues that it's ultimately bullish for long-term investors. By artificially suppressing prices, manipulators create a coiled spring effect. When the spring is released, the resulting price surge can be dramatic. For silver investors, this means patience and conviction are rewarded. Oliver also touches on the silver-to-gold ratio, which has historically been a reliable indicator of silver's undervaluation. This ratio suggests that silver has significant room to run. If silver begins to close the gap with gold, it could signal the start of a prolonged bull market. This isn't just speculation, it's grounded in historical patterns and current market dynamics. Diversification remains a cornerstone of prudent investing. While gold is often seen as the ultimate safe haven, silver offers a unique blend of safety and growth potential. Its affordability makes it accessible to a broader audience, including younger investors who are increasingly skeptical of traditional financial systems. For millennials and Gen Z, silver represents a tangible asset that aligns with their values and provides exposure to industries shaping the future. Institutional adoption of silver is another wildcard. Currently, institutional portfolios have minimal exposure to silver. A Bank of America survey from late 2023 revealed that 71% of financial advisors had a 0 to 1% allocation to precious metals, with only 2% allocating 5 to 10%. This leaves enormous room for growth. As institutions begin to recognize silver's value, their entry into the market could create a tidal wave of demand. The public, too, is likely to follow. As silver's industrial applications and price performance gain mainstream attention, retail investors will flock to the market. This could create a virtuous cycle where increased demand drives prices higher, attracting even more investors. Silver's accessibility is another advantage. Unlike gold, which can be prohibitively expensive for some, silver allows smaller investors to participate. This inclusivity could prove crucial in a bull market, as it broadens the base of potential buyers. The renewable energy transition is not just a trend, it's a necessity. As the world moves away from fossil fuels, the demand for materials like silver will only grow. Governments and corporations are investing trillions of dollars into green energy initiatives, and silver is at the heart of this transformation. For investors, the time to act is now. Waiting for headlines to validate silver's potential means missing out on the early stages of a bull market. As Oliver notes, the opportunity lies in recognizing the trends before they become obvious to everyone else. Michael Oliver's analysis underscores silver's unique position in today's economy. Its dual role as a monetary and industrial metal, combined with rising demand and constrained supply, creates a compelling case for investment. While challenges like market manipulation exist, they are ultimately temporary roadblocks in a broader trend of increasing value. In a world grappling with economic uncertainty, technological transformation, and climate change, silver offers a rare combination of safety and growth. For those willing to embrace its potential, the rewards could be substantial. As Oliver aptly puts it, silver is poised to gush once the world wakes up to its value. The question is not if, but when. Will you be ready?
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.